welcome to this week's Microsoft Sustainability Dialogues in Saudi Arabia podcast, where we're jumping into this massive acceleration towards decarbonization, sustainability throughout the kingdom, obviously not just the kingdom, but regionally and globally, trying to tackle some of the top of mind challenges. Today's topic is mobilizing climate finance and investments to meet environmental goals. I'm joined here today with our special guest speakers, Bandar El Blahid, Head of Client Relations Development at Saudi Exchange, Bashar Al Natour, Global Head of Islamic Finance at Fitch Ratings, and Elko Vender Enden, Chief Executive Officer from the Global Reporting Initiatives. Thank you very much, you all, for joining. Bandar, I just wanted to kick off with you first, of course, representing Saudi Exchange. There's massive transformation going on in the kingdom aligned with Vision 2030 and the Saudi Green Initiative. Where is the Saudi Exchange playing its role in that part in terms of acceleration towards sustainability throughout the kingdom?
Absolutely. Thank you, Brian. First of all, I would like to thank Microsoft, and it's great to be here among our fellow experts and panelists and moderator. Saudi Arabia, I would say, plays a massive role when it comes to the sustainability development. As you rightfully mentioned, there is a Vision 2030. It is sustainability plays a major role in that, and finance and capital markets is one of the key pillars of the vision, where this is exactly where the Saudi Exchange stands as the only authorized exchange at the moment in the kingdom. We've seen massive investments inflows from international investors, currently at over 300 billion Saudi riyals. We have, and this trend is going up. And these investors also come with their own perspectives when it comes to sustainability. They have their own metrics and systems and standards that they want to implement. So there are also, as you know, when it comes to sustainability, there are risks and there are opportunities. So I think this is where the exchange comes in. We play a big role with our issuers, the listed companies. We try to help them voluntarily disclose their ESG practices. In fact, in late 2021, we have issued our first ESG disclosure guidelines. This has been received very positively by the market. But on top of that, we're also working with other entities, government entities, ministries, to help shape the ESG landscape in the kingdom. And I say we stand in a very peculiar place because we connect the international investments, thought leaders, with the local market. So we play as a conduit to, shape up the concerns that are happening within the local market to the international, but also bring this international best practices to the kingdom. Another thing that we're doing, we've signed the Sustainable Stock Exchanges Initiative by the United Nations back in 2018. We've also members of UN Global Compact, and we do a lot in terms of I would say awareness to the market. And I think this is the key element, our phase one, when it comes to ESG, given that ESG is on sustainability and generally is still as its infancy in the region. So the first step is the awareness.
With that ESG aspect, I mean, just touching on that point, I think there's a lot of stakeholders who are very much at different spots on their journey. And of course, Saudi Exchange offering that support in ESG disclosures. Are you seeing a lot of uptake with that support? And from your perspective, can you just touch on how, again, more of how everyone's kind of at that different part of ESG? I think some are still trying to define it essentially for their own organizations, let alone kind of push into that space entirely.
Absolutely. I mean, Brian, you're spot on. We've seen that huge difference between some corporates and companies that are doing and pushing the ESG agenda forward, but there are also these newer, smaller companies that would need this guidance from us and from other entities to help them achieve their goals and aspirations. So yes, part of the Saudi Green Initiative and part of the Kingdom's pledge to go net zero, we've seen several listed companies, major companies that have also pledged to net zeros. So I think this is a huge development in the Saudi market. But on the other hand, we're helping those smaller companies. So we've done several training sessions with ESG and sustainability experts to these issuers to help them achieve this goal. In fact, funny story is one of the ESG training session, the Q&A section was longer than the training itself. So, the
That's
issuers
good.
keep asking questions and they're interested. So that's a good thing. And our next step from the exchange is to start I would call it one-on-one advisory service to the issuer. We will call them proactively, reach out to them. We have the data on them. We know where they stand compared to their peers, and we will help them achieve the level of their peers going forward.
Well, I think the question aspect is a big part of this, and communication in order to achieve the goals and targets that have been set out is critical for that. And just talking on that data point, Elko, I just wanted to go with you to get your perspective on the fact that, again, there's so many announcements, there's so much change, there's so much transformation occurring, of course, throughout the Middle East, but globally, where you see transparency playing a role in that and helping to accelerate the possibility to reach these targets, and how, of course, your organization is playing a role to change that landscape and kind of turn that into a win-win for all stakeholders.
Well, let me start by defining the common denominator we see where stakeholders around the world are interested in. Businesses, investors, local communities, whomever you have, and that is transparency and comparable data. It's all about comparable data, and you can only get comparable data by transparently reporting on them, and preferably within the framework of a global baseline to report on. So why do I mention that last point? There is a big push by capital markets. Thank God there is a big push by capital markets to create a global reporting landscape that is indeed comparable. So what we have seen over the last couple of months,
it's not an easy thing to do at the moment.
It is easier than you may think.
Really? Oh.
We overcomplicate things. It is about the political willingness to move. And what I think is so wonderful is that the big initiatives that have been taken in the past were private initiatives, were initiatives by capital markets and by businesses, not so much as by governance and regulators. What we look at GRI, we were founded 25 years ago by US institutional investors in Boston. So we have a US basis. If you look at the IFRS Foundation and how it was founded, it was not governmental. But what we currently see happening is that with the foundation of the ISSB, the International Sustainability Standards Board, a sister organization of the International Accounting Standard Board, there is a drive towards cooperation with, amongst others, GRI. So we have this memorandum of understanding. So let's park that one there and explain the difference for a second. The financial standards see on the value creating or destructive effects that ESG topics, sustainability topics have on the bottom line of the reporting entity. So what does global warming, climate change, social unrest, or bad governance do with your value? How does it impact your investors? So that's what ISSB is doing. Then you have GRI. What we do is basically measure and provide a platform to report on and to provide stakeholders, including investors, with these comparable data, what the effects are of business trying to achieve their strategic objectives on climate, on society, and on their governance. So if you have a plant, how much greenhouse gas comes out? What are the effects of platform organizations on local labor situations, contractors versus employees? Why is this important? It's important to understand that when we speak about ESG reporting, there are two pillars that are equally important. The one is the financial, which is basically outside in. So what are the effects of outside events on ESG, on the value of the organization? And the other one is inside out. What are the effects the business have on local communities, on the environment, and on socio-economic cohesion? So these two organizations, ISSB, under the IFRS Foundation, and GRI, we start to cooperate even more closely in the very near future to build this global baseline. Another issue, what we currently see happening, of course, is the introduction of mandatory ESG reporting. So we are voluntarily a basis. More than 11,000 multinationals use GRI voluntarily. But in Europe, as from financial year 2024, there will be mandatory ESG reporting. And that is based on the so-called double materiality principle, meaning on the one side, the financial aspects, and on the other side, the impact aspects. So there you also see a big chunk of GRI. Right. How that in the end will work out, that is difficult to say, but be aware, wherever you are in the world, if you do substantial business in Europe, you will have to report this mandatory.
Are you seeing that, the data gathering behind that, let's, in terms of impact, let's say, I imagine that's a task in itself. Are you seeing corporations actually having the capacity internally to be able to present that data so that we then can, make those reporting around impact? Or do you think that they're still kind of at the beginning stage in order to do so?
The answer is yes. And if I would choose a cowardly answer, I would say, have a look at the World Economic Forum International Business Council report of January and November 2020, where they identified 22 core metrics. And the core on ESG you have to report on. And by the way, of the 22, 17 is referred to use the GRI standards. But they describe a core metric as a metric that you already do report on, or, which is silly, or something that you could easily extract that information out of your organization. But I will not use the cowardly answer. I will use what I think is at stake. The questions I now get in my capacity as CEO of GRI on how to implement and how to start building towards internal control framework for extracting ESG data and reporting them. They are exactly the same that I got when I was sitting on the other side of the fence and working with the introduction of international accounting standards. So how can I make sure that the financial data I need for my international accounting standard reports, for my financial report, how can I make sure I can extract that I can monitor and test that the information I provide is indeed correct? Exactly the same questions I get right now on the ESG data. The topic is different, but the questions are the same. It is how to build a control framework of sufficient quality, enabling you to extract efficiently and effectively data for capital markets and other stakeholders. But it can be done, yes.
Well, it's a journey ahead, but it seems like there's a lot of traction behind it, and of course, a lot of stakeholder buy-in. Bashar, I just want to bring you in with a different segment, of course, touching on Islamic finance. There's a massive opportunity in the region for Islamic finance in general, of course, but also moving into the green space. Can you just touch on the differences of both and what your outlook is, essentially?
Okay. Thank you very much for having me, and it's a pleasure to be among such esteemed panelists. I think the key point that you're saying, there is differences, but there is commonalities too. And if I am to simplify, I would say, two words and how do they interact, I would say, let's look at three factors. So let's look at impact. and let's look at negative filtering, and let's look at structure. Now, impact, I think, is the common ground between Islamic finance and impacts when it comes for environmental and for green is the same, but it has its own way. So you have zakat, and you have waqf, and you have specific instruments that contributes directly to society, and it is built in Islamic finance. So the impact side, from the way that it is structured, it has some commonalities, but you need to go the extra mile for Islamic finance to be green. You need to go the extra mile to be sustainable. You need to go. So it's not identical. I'll come to how is that there. So this is the impact side, and I think it's the easiest part. The other side of it is negative filtering. So if I am sitting in Luxembourg or in New York or in London and looking at anyone giving me a presentation on ESG, sustainability, not Islamic finance, you will mostly see a slide with alcohol being crossed, tobacco being crossed, gambling being crossed, pornography being crossed. This is automatic in Islamic finance. So you don't need really to do anything other than just being Islamic finance to qualify for that chart. And for me, when I am sitting in a panel where you have the conventional side of things, I say, can we go to that slide, please? And I just say, okay, this is built in Islamic finance. So there is that commonality, but we've discussed about impact and negative filtering. There is the third element, and I think here where Islamic finance is different. So on top of all of these, you need to go the extra mile for impact if you are to attract the international ESG sensitive investor. You have the negative filtering then, but it's not only that. You have to have a specific structure that complies with Sharia, which is the Islamic ruling. And I think that is the most complex side of the equation. To qualify for an Islamic finance, it doesn't just, okay, not having alcohol, that's fine, for example, and you are benefiting the environment or green. You actually need to do the transaction in a specific way that complies with Sharia, because that is, I think, where the differences also shine. So I would say there are commonalities, but they are not identical. There are a few points that Islamic finance will tick the box immediately, but they will need to work more on the impact side. This is on the 3 dimensions. But if I add to that, and I think as Bandar beautifully put it, the whole sustainability and ESG concept in the region and where Islamic finance is active, it's on varying degrees. Some of it is really on infancy, and some of it is not crawling. Some of it is maybe at a faster pace. But in the majority of these countries, including the GCC and other countries, it's at an early stage, and that is something that has its own challenges, not only on ESG, but awareness, understanding, and drive. And here, that will drive us to another topic which we can discuss is it going to be a top-down or a bottom-up? And how does that pan out? And just before I conclude on this point, if I zoom into Saudi Arabia and if I look at the financial sector development program and 2030 vision, actually the kingdom has already some objectives for Islamic finance. The kingdom wants to be the Islamic capital, the Islamic finance and economic capital market of the world. So you already have an objective that has another side of it that could actually interact and work together. And I think recently, and I'm sure Bandar can maybe elaborate more, even recently there was a Sharia compliant index that was published and sent in Saudi Arabia. So they're moving in multi-directions. These directions could intersect in some point, but there is so many points that the Islamic finance industry needs to do on itself to attract more than the Sharia sensitive investor and to be more appealing to the international ESG sensitive investor, if we can say that point.
How big would you say the market size is currently at the moment?
If we are looking at the market side, and I think this is a very interesting point. So if we look at Saudi Arabia specifically, the interesting point is when we saw, for example, issuance in the debt capital market, Saudi, the choice to build that issuance was on top of Sukuk. So what does that mean? If there is an issuance of ESG, the issuance of ESG came on top of a Sukuk rather than a bond. And I think that's a very important factor, because at the end of the day, it shows you that if I am to appeal to the ESG investor, I would like to do it on top of Sukuk. And if I'm to put a percentage, 90%, 90.7% of hard currency ESG sukuk outstanding in Saudi Arabia, they are in a sukuk format, not in a conventional format. The actual size of the industry is not really big. But if you look at the Islamic finance industry, so I told you how significant is Saudi and Islamic finance and ESG. It's 90%. Right. If I link that to the broader picture and look at the Islamic finance industry outstanding sukuk, rated by Fitch, so what is in outstanding, it's around 130 billion US dollar outstanding as of the first half of the year. If I look at the ESG, it represents around 10% of that, and Saudi Arabia is around 47% of that. So it's significant. Oh, wow. Exactly. So it's significant to the Islamic finance industry. It is significant to the ESG story, not only in Saudi Arabia, but in the region and the whole OIC countries, which is 57 countries. And because that objective is there, you can see that, okay, maybe we're talking about sukuk around 17 point something billion outstanding US dollar. But the trajectory from 2017 to now to in the sukuk industry and in the Islamic finance sector, it has been upwards, even in COVID, during COVID, even during that. You have to bear in mind, Saudi Arabia is not only just banks and corporates. You also have IDB, the Islamic Development Bank, and it's a substantial player also in the substantial market. And that, just for qualification of the number, for us, we're including it under Saudi Arabia.
Bandar, I just want to go back to you as well. Obviously, of course, Bashar was just talking about Saudi Arabia, the environment there for Islamic finance in terms of being a major contributor to, let's say, the acceleration of the overall industry. But you could also argue that that is across multiple segments overall. What do you see as we look at other exchanges in the region internationally? What do you see as Saudi's competitive advantages? That, of course, is attracting investments. Are you seeing any major points in which actually can be best practices shared regionally and globally at the same time from Saudi Arabia?
Yeah, absolutely. I mean, looking at Saudi Arabia, it's one of the G20 countries. The economy is huge and cannot be ignored. The transition that the country is going through right now is also an amazing opportunity for many investors to look into these projects. We have the Giga projects, Neom and the Red Sea, but also other exciting, transitional projects. The kingdom is also investing heavily, not only on, green and renewable energy, but also on exciting developments in green and blue hydrogen. So this is also part of the transition. So so that's one part. This is the energy part, but you also have the hospitality part and other major investments. So I would say it's well diversified, and I guess this is the major, goal of the vision is to diversify away from oil. So there are a lot of exciting opportunities. The exchange works as a conduit and as an ambassador to what the Saudi economy is doing. We have some exciting listings in our market, companies that do a lot of good in the environment. One example is Aqua Power, for example. They work on renewable energy. So there are a lot of that point. On the other hand, again, being one of the most liquid exchanges in the region also means that it is easier and we're more trustworthy because investors can access the market easily. And that accessibility has been relaxed several times in the past couple of years through the QFI program set up, or what we call the Qualified Foreign Investor program set up by our regulator, the CMA. So yeah, the ease of access, the exciting opportunities, and the transitional period, I think definitely gives the kingdom, a very big, to be a very interesting target and for the investors.
It also appears as well throughout Saudi Arabia that there is this great push for collaboration and partnerships, cross functions in a sense. Are you seeing that play a critical role as well?
100%. I couldn't agree more. I mean, taking it from our perspective as a Saudi exchange, we've signed several MOUs with local entities, whether government or private, to drive the ESG agenda forward and the ecosystem forward in the country. I mean, just a couple of examples. We have an MOU with King Khalid Foundation, who have fantastic sustainability awards. We also have an MOU with FII, Future Investments Initiative, and that also is concerned about ESG. We have, bilateral talks with many of the ministries that are, heading their sectors, right? There are certain sectors, whether in the energy, whether on, others. So we deal with all of them. There is this energy and excitement in the kingdom when it comes to sustainability and ESG and what we can do to drive this forward. But also, it's worth noting that when we look at the Saudi market, and maybe Mr. Elko can, because GRI is also very well involved in the kingdom. We've seen that a lot of the Saudi companies do tremendous things on the three pillars, on the E, the S, and the G, but they do not disclose it, or they don't disclose it to the right venues. And this is where the exchange comes in to help them, right? I mean, obviously, on the governance side, we have the CMA and their own governance regulations. So I think we're pretty good on that. On the social side, I mean, the woman empowerment and gender equality that is happening across the companies, it's amazing. The training, and not only from inside the company, but also as a corporate social responsibility, they give back to their communities. And also on the energy, especially on the new renewables projects and all of these things, I guess it will have a huge impact in the future.
Okay, I just wanted to touch on that. Yeah, sure, of course. If you wanted to follow up that.
If I may respond to that, and I couldn't agree more, and also what I see, and I think we should not forget something that comes perhaps to some people as new, but in fact ESG is just doing good business. It's about managing your operation. And if you think of it, it's about long-term risk management, financial and non-financial. And let me explain that. And let me give you an example where you see if organizations do not diversify and take things into account, it can go awfully wrong. And in Saudi Arabia, they take the right steps. Where they didn't take the right steps, for example, was some large businesses in Bavaria, in Germany. And that may come as a shock, but you've all been reading it in the newspapers. So in their Green Deal, they closed down nuclear power plants. And the industries, they choose to become fully reliant upon Russian gas. They did no innovation in looking into other sustainable sources of energy to basically power their industries. And what you do see happening right now is that you go for the easy way, quick and dirty, a quick fix. You will always pay the price. And that's what's happening right now. So this is typically a part of the E, but it's also a part of the G of good governance. It's longer term risk management. If you are in retail and you do not take into account global warming and you have not a strategy for long-term contracts on delivery of energy for the additional power you need for cooling your products, that you're a commit malpractice. If you are in transport, warehousing, and you do not have a safe workplace, you will face a mutiny amongst your staff, which is bad business. If you do not live up to your anti-bribery policies in your organization, because the monitoring and testing is not of a good quality, and you're, for example, in mining industry, and it appears that in one country things went wrong, you will face lawsuits, criminal investigations, and you will lose the rights to drill or to mine or to operate. So ESG is not some woke leftish idea out of the 70s. It is just doing good business. As to the point about transparency, it takes it takes a step to indeed become transparent, and every first step is difficult. But what I can say that many organizations I've been dealing with that voluntarily report under our standards, they all went through the psychology of disclosures. That's how I call it. So if I publish this, what will be the responses of the market? And will I get perhaps more questions I can't answer than not? Fact is that most organizations, by far most, get very positive responses in being transparent. And then I close. I'll give you one example. I've been co-developing GRI 207 tax, the tax transparency standard. And many large businesses, especially in oil and gas industry, they were very much afraid of, oh, if we're going to publish, should we do it or not? But if you look at British Petroleum, Anglo-American, and so forth, they all use GRI 207. In fact, they were praised by some, let's call it, activistic NGOs, but also by their own employees and works councils as a stakeholder, because they had a story to tell when they were at birthday parties or whatever, when they were challenged by stories about tax evasion, multinationals, blah, blah, blah. So now they use transparency, these organizations, to demystify some stories in the market and provide facts to society and investors. So they no longer have to make decisions based upon perceptions, because most of the times they are not true, especially, and I would like to link in to what Bandar said. Most businesses really try to do good. They do their utter best. So it's such a missed opportunity not to show society and your investors all the endeavors you do in this field to make it a better place, and also, of course, to increase your profitability.
I was just going to ask on that as well. It's you are seeing some headlines globally, on greenwashing, let's say, around ESG. Are you seeing the standards cut right through that? As you said, transparency actually is a win-win and a sales point at the end of the day.
Absolutely. If I look, I think greenwashing is one of the biggest dangers for the investor community and for business itself. And I tell you why. Greenwashing is not a joke. And some still see ESG as a marketing gimmick and not something as doing good business. But if you provide your stakeholders, be it investors or works councils or whatever, if you provide them with false information or inflated information in order to try to influence their decision making, I do not see the difference with blowing up your balance sheet or providing inaccurate data on your profitability. We call that financial fraud. I think that inflated data on ESG or providing information that is false, for example, on net zero commitments, and you do exactly the opposite. To me, that's fraud, and it should be treated on par with financial fraud.
Bashar, I just wanted to come back to you, of course, with Islamic finance. You had mentioned earlier, creating that environment. Do we go a top-down approach or a bottom-up approach? Are you seeing in terms to bring more awareness to the market that there needs to be more incentives done or incentives implemented in the Middle East from government in order to help ignite the opportunity that's there?
I think that's a fundamental question, because at the end of the day, to drive this, or as you beautifully put it, to ignite that side of the equation that is just started now, you really need to have drivers. Now, the bottom up is where the governments are stepping in, and that is not only incentives. Of course, incentive is part of it. We saw that in other countries like Malaysia and many other countries where you put incentives there. But it's also putting frameworks. It's adding transparency. It's adding the right guidelines. What will this create? It will create three things. It will create awareness and confidence, ultimately. This is the same that we saw in Islamic finance. So at the end of the day, you need to be aware of it, and you need to be confident about what you're doing. Now, why do I always come back to Islamic finance when we were talking about Saudi Arabia? If you are looking at the financing in Saudi Arabia in the banking sector, more than 83% of financing is in an Islamic finance format. If you look at the sukuk issuance, if you look at the corporate sukuk issuance in Saudi Arabia, last year or in some years, it's actually 100% sukuk. So corporates will go for sukuk to attract the wider investor base. On that, you can build ESG or you can build without ESG, but it's a sukuk. The Saudi government, when they issue Saudi riyal, in the last few years, it's only sukuk. So wherever you look at, you will find that. So this is creating an ecosystem that supports whether ESG or Islamic finance, and also promote the commonalities and highlight the differences and being transparent about it. So this is the top down. Now the bottom up is actually the awareness, and the awareness is a multi-dimensional issue when it comes whether to Islamic finance or the ESG in the region, because you're looking at, I would say, in different areas. But Saudi Arabia is very advanced when it comes to Islamic finance, because the bottom up, i.e. the customer base, the corporate base, they are very much in demand for Islamic finance product. But if you add to that, or if you talk to them about ESG, sustainability, it's not high on the agenda. And in some cases, it's not there. And I think this is where the bottom-up base that you need on. For Islamic finance in Saudi Arabia, the actual driver for the 84% of financing was actually the bottom-up. You had a very strong demand coming from the corporates, from the retail, from the customers that wanted this over the past decades, where you stand now at 84%, which is a leading indicator in the Islamic finance industry, and this is one of their objectives. Do we have the same in sustainability? I would say definitely not. So the bottom up needs to be educated, needs to be built in. If you look at other more developed markets, you'll have employees that are demanding ESG. You will have customers demanding ESG. You have financiers demanding ESG. In the region and in local terminology, the Islamic, so the local investor and the regional investor are not yet at a very developed stage where you have a very strict criteria for ESG. The one that has is actually the international ESG investor. So this is the main drivers for example, the sukuk that I told you about. It is to attract and maintain the Islamic investor, and on top of that, attract the international ESG sensitive investor. So at the end of the day, as you can see, one of the drivers is saying, okay, if I want to expand my investor pool, as an example, I will go and have a sukuk to maintain my Islamic investor, and on top of that, put an ESG element or a sustainable element to attract the ESG sensitive investor. And that's a driver which is from a bottom up, because you're an issuer and you're trying to attract a bigger investor base. The government is also putting it on the strategy. They are launching projects, and this is a very important point. There is a lot of projects in the pipeline in Saudi Arabia, in the region, and in the OIC countries, the 57 countries. That pipeline of project, it creates a funding gap, and that funding gaps needs to be financed. And in countries where you have a significant Islamic finance industry, it will have a share of that. So for me, it's interesting to see how fast is this going to develop, how is this huge funding gap is going to be funded, and how much of that is going to be conventional and how much of that is going to be Islamic finance. So you can see we talked about the top down, bottom up, and the middle, and how is this moving ahead.
Well, it seems that we're actually over 30 minutes now. It actually goes by pretty fast on these podcasts. But I just want to do a quick round of closing comments, starting with you, Bandar. Of course, we have COP27 coming up in Egypt. We have COP28 coming up, of course, in the UAE. The spotlight is going to be on the region, and of course, Saudi Arabia will be a big part of that as well. What are your expectations? What do you think will be done that's going to really help turn the dial on things and really accelerate us overall towards meeting our goals?
Absolutely. I think right now we've seen the momentum growing, the interest from the governments, regulators, investors, and companies are increasing. I think right now is the time to move ahead. One of the global issues, not only in the region, is the many standards, the fragmentation in some cases, and I think having a global consensus on what is ESG, what is accepted, and making sure to the point of greenwashing, that these data are verified and are correct, is also important. I think the government will, I mean, COP26, we were involved in it. We will be involved hopefully with the next couple of ones. Climate change is also a big ask there, but also the country is doing great when it comes to climate change and what they're proposing to change these things. The circular carbon economy and pledge to net zero are two of our top agendas, I would assume.
And Elko, the same to you. If I can just get your final comments, of course, on that topic.
I sincerely hope and keep pushing that we will end up with this global comprehensive baseline that is based on two pillars, the financial and the impact one. And what I would like to stress is that, in fact, we already have that. So let's not reinvent the wheel. And whether it should be mandatory or not mandatory, I'm not a regulator, so that's not my business. But what I do know is that there are 11,000 multinationals that voluntarily use GRI standards. And all those companies already also use international accounting standards or financial accounting standards. So if we already have this as a proof of concept now for 25 years, then why should we seriously change this to such an extent that you will see increased cost of compliance if businesses need to realign and if capital markets need to adjust to new systems? Make use of what you have, and let's go for this global comprehensive baseline.
And Bashar, I'll pass it off to you to help close out the session with your final comments.
I think in Saudi Arabia and in the region, the recent trend of ESG financing and Islamic financing has been a growth trajectory. And the growth trajectory in sustainability and ESG has been built a lot on Islamic finance. We expect that momentum to continue. We expect the story of growth, maybe if really the realization of these roadmaps and strategies to develop this industry are realized on the ground, to maybe accelerate further. And as awareness is built and as the frameworks and guidelines is built for both Islamic finance and ESG, you will arrive at you'd start to build confidence. And that by itself is another level of booster for local, regional, and international investors.
Well, thank you, Bandar, Elko, and Bashar for giving your insights today, and of course joining us as special guest speakers. We really appreciate it. For those who are listening, please feel free to follow them on social media, online, of course, where I'm sure you'll be seeing updates and insights, probably accelerating to COP27, and then from there, the sky's the limit. But thank you very much, everyone, for joining us today. Appreciate your time.